G'day folks, welcome back to another update for gold and silver. Now they're both broken through resistance we had drawn previously, so it's both fairly bullish still. We're going to include some back testing. Before we go any further, make sure you hit that like and subscribe button to support the channel. Also reference the +1 videos where we do a deeper dive into some of the trading strategies, one of which we'll cover today. In terms of the outlook, I won't read through all of this other than to say the gold has got investor flight to safety, central bank accumulation, and US Fed and dollar dynamics are playing an impact on that. And for silver, trading and industrial silver is high in demand with a diplomatic flux still from various regions of the world. Gold is sitting around $35.26 or $35.28 an ounce, breaking all-time highs with projections to reach $3,700 to $4,000 if current tensions persist. Silver's trading near $40 to $41 an ounce, its highest level in over a decade, supported by both safe haven flows and in growing industrial demand. HSBC forecasts an average of $35 with rising potential. So first looking at gold, we always look at the long-term trends with the weekly, the daily and the hourly. So first off on the weekly, you can see the price is still well above our moving averages, whereas the CCI is actually in a decline. So dropping CCI versus higher pricing. That's basically a bearish divergence. You can see there lower highs on the CCI versus higher highs on the price. It's actually gone just a bit higher than what it was previously there. So we'll just move that trend line to that point, whereas the CCI is still dropping. So that's still a bearish divergence. And if that was to pull back, we expect a pullback target. I've drawn a target range there previously, but we'll draw another one now just because of that little adjustment. We draw a Fibonacci from that high, assuming it pulls back from where it is at the moment, and I'm guessing it's probably going to go a bit higher possibly. So we can expect a pullback into that 23-38% range of a Fibonacci if it starts pulling back from there. Of course, the CCI is moving higher, and so is the price, so we may see further highs before we get too excited about any downturn at the moment. Although that still is a bearish divergence, so just be mindful of that. That could turn any time. That's the weekly. Bullish, somewhat bullish to neutral on the weekly. On the daily, it's actually broken through that resistance we had drawn previously at 34.51. And you can see there the CCI is still rising pretty sharply, so there's no sign of a pullback yet on the daily. Whereas if we look at the 1 hour time frame for any micro moves, and by micro moves I'm saying even if you're trading on the daily, we look at the hourly for any smaller moves. Now what has happened there since our last update, we had a new high, a slightly new high there on the CCI, and that's still a bearish divergence versus the same period on the price. Now because of that, I'm going to raise that trend line to that high up there. As I said, that CCI is dropping off, so we might see it pull back, and if that happened, on the hourly, we'll draw a Fibonacci range from that high down to that significant low. And that'll be in that range there. Now, again, a bit too early. I don't trade these divergences. I look at them as a potential exit if I was going long during this period. I might be taking some profits off the table. That's how I use these divergences to get out of trades. And I'll show you that in the back test in a moment. But at the moment, like I said, on all these time frames, on the weekly, daily, and hourly, we might see further upside possibly, but that's showing a bearish divergence on the weekly at least, and the hourly. The daily is also showing, actually, I didn't mark it, but that's also showing a bearish divergence. From that high to that high, it's higher. The same period from that high to that high is lower. That's a bearish divergence as well. So again, to draw a Fibonacci on that, go to that from that high to that low. And we expect a minimum pullback to that 23-38% range. Of course, could go a lot lower, could just touch it and bounce, or could go a lot lower. We don't know. But at this point, it looks like the price may still go higher, but just be careful. We've got a bearish divergence on all three time frames. So in terms of the back test, what we're looking for here, let's go to the bullish back test. I've gone long from that point there on the 22nd of May. I could have gone further back, but I just to demonstrate this little period where it's pretty much going sideways. On the 22nd of May, going long, and basically the strategy I'm using here is whenever the price moving averages are in an incline, and so is the CCI, but also wait for the CCI 14 to break to the upside to take any long positions. And what I'm looking for here is I trade primarily in the direction of the daily, and whenever you see the CCI break to the upside, take long positions, and when it breaks into that moving average range on the daily, you close out your positions at the latest. The other thing you look out for as well, let it run on the hourly as long as both CCI and price moving averages are increasing, but look out for these little divergence. I've marked them. There's all these little divergence scattered throughout the whole time frame. So whenever you see those, so for example, going long during this little period, you would have closed out your first position on that decline on the moving average price, but also you can see there as a bearish divergence. Go up, go long again during that little period, and close out your positions again when it starts dropping off. We see a bearish divergence. And here you can see there are a few trades made in that little range there, but also there was a bit of a drawdown here. And again, notice there we've got a bearish divergence on the CCI versus higher highs on the price, and you would have closed out your position at the latest once the moving averages started bending down. You would have got out somewhere in that range up there, probably with a position opened, but that would have avoided you having that drawdown, so you would have got out with that little profit up there. That's why I'm saying take your profits whenever you see a bearish divergence. So silver has got a similar sort of pattern. We've got new highs on the weekly versus slightly higher highs on the CCI, but notice that's still a bearish divergence compared to the price, so bearish divergence. Both are still bullish, well above the moving averages, so bullish momentum on the weekly. On the daily, likewise, just extend that trend line, still a bearish divergence. So those new highs, still bearish divergence. I won't draw the targets, but you get the idea. You have to pull back the Fibonacci to that recent low, at least. So bearish divergence on the daily as well, and also on the hourly. We drew this divergence previously, and to that point, that would have been, I drew a target range F from that point there. Now since then, the CCI has risen to that new high. Notice it's an increase peak. So that now invalidates the bearish divergence. So I'm going to delete that because that's no longer a divergence. So at this point, the CCI starts moving in line with the price. Now at this point here though, that's why you have to readjust these and keep track of them. Notice there you've got declining, we'll take it to that point there, declining highs on the CCI versus the same period, increasing highs on the price. That's a bearish divergence there. I'm going to delete this target range, which has been invalidated. And what we do now is we draw a shorter term bearish divergence, and we can expect, if assuming the price continues to decline from here, and it looks like it will, the CCI is dropping off and so is the price. We're going to expect it to hit at the minimum that 23-38% Fibonacci range. Of course, could go a lot further, but that's the minimum we can expect. Again, I don't trade these. If I was going long and I saw that divergence, I'd start taking profits off the table. In terms of the back test, now again, I'm using the same strategy, but notice here is a massive drawdown because of that decline on the price and the CCI. I've left that in there deliberately. You could have ideally, again, notice what the daily CCI was doing. You would have avoided staying in long trades during those declines when they were below the moving average of the CCI, even though the price is moving higher. Up until this point, you were doing okay. Now, but notice here we had a bearish divergence. Okay, so you would have got out of the trade somewhere around that point there when the moving averages of the price and the CCI were declining. You would have got out near the top there. There were no positions open, so you would have saved your capital. So always pay attention to divergence. Make sure you hit that like and subscribe and share buttons. If you enjoy the content, subscribe at least on a free trial to my Patreon page where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.